Hi, Brianna.
Hello, how are you?
Good to hear from you. Let me just put you in charge of the class for 1 minute, okay?
Okay. You need to stay outside if you're playing in the mic.
I'm just trying to see.
Okay, I heard no outbursts, so I guess we're okay, huh? Well, we will wait another minute and then we're going to go through a test review, okay? A test review.
Very good.
Hi, Justin.
Hi.
Okay, you there, Justin?
Yeah, I'm here. How are you?
Good, good. You want to show your face, anybody? Brianna, Justin?
Maybe after I finish this lunch, I will turn my camera on.
They make me show my mug, so I'm at a disadvantage.
Why they pay
Okay,
you the big bucks.
what's that?
I said that's why they pay you the big bucks.
Exactly. Oh, there he is. Justin, I have to say hi to my buddy here. How you doing? Hi, ready? Can you hear me, Brianna? Are you ready, pal? Da, 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 da. Da, 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 da. You get it? Okay, this guy's gonna have to hit the bricks. There you go. The humor emanates from the juxtaposition of the ears and the oracle. We'll talk later on. Okay. Bye-bye. All right, Justin, I'm going to have to cut this part out of the tape, I guess, huh? All right. Let's begin a test review. A test review. And let me find the one that I want to. Okay. Can you see the test, Justin? Can you see it, Brianna?
I can see it.
Okay,
Yes.
the test is there. Okay. Because I don't want to look like an idiot talking for a half hour and you tell me you're just looking at me. Okay, what I thought I would do is take us through one of the tests that I made up a couple of years ago when we were in the classroom. And then I have another one done by another teacher. Keep in mind that you're going to get a third version of a test when you take the test this weekend. It's going to come out of the test bank. I am not preparing any of the questions for the test. Cornelia does that, and she has her way of asking questions. But let's just go through this and jump in with any questions or. In fact, I'm going to make you guys try to answer these. You ready? Here we go. When a company issues common stock, what is the impact on assets and equity? Assets and equity. Would you like to try that one, Brianna? When you issue stock to the public, what asset is involved?
Cash?
Cash, yeah. And what happens to the equity in company?
Increases also?
There you go. Exactly right. And let me highlight. I'll highlight these as we go along, if that's okay.
For our midterm this weekend, is it
Yes.
all multiple choice or is it going to have us fill stuff out and kind of like?
It's going to be all multiple choice, Justin, but some of the problems are going to require you to sit down and do some ciphering. In other words, some of the questions will be rather easy, not easy, but true false questions you can answer immediately. But there will be others where you're going to have to do some calculating, like we're going to be doing up ahead here. You're not going to get a big long problem, no, if that's what you're worried about. And just bear with me here. I'm finding this rather annoying. Okay, all right, here we go. Okay, that's B. I'll mark the next ones more clearly, okay? All right, here we go. The matching principle. What does the matching principle talk about?
Revenues and expenses.
Absolutely. Good. That's all the matching principle's talking about. That you, and let me see if I can give us a better color here. I can't believe this. Okay, we can read that. Yeah, revenues and expenses. That's the matching principle, making sure that the expenses you record in this month are the expenses that you actually incurred. Which is not a current asset. Inventory is a current asset, right?
Yes.
Accounts receivable,
Yes.
and so is prepaid insurance. What is accumulated depreciation? A contra account to a fixed asset. Your journal entry, your adjusting journal entry is always going to be a debit to depreciation expense and a credit to this contra asset account. It is an account that's an asset, but it has an outlying credit balance. And that's the first of your contra accounts you're seeing here in this class. Okay. Hey, Justin, you want to take a shot at number 4? This one's pretty easy, I think. Which of the following accounts is not a component of equity?
Long-term liabilities.
Absolutely. Absolutely. Yeah, equity. Equity is your common stock, you're paid in stock, your retained earnings, you're paid in capital, all kinds of goodies. Okay, I'm going to give the answer to this one, okay? Because I think this one's over your head. Each accounting entry must include 2, right? Double entry. We know that, right? Yes, we know that. And let me fix this. Each accounting transaction, I'll say. Fix my own test. Whoop. Okay. Yeah, everything requires 1 debit, 1 credit. You can have 1 debit and 1,000,000 credits, or the other way around, but you have to have 1 of each. All right, here we go. Here we go. Here's our first request for a journal entry. A lawyer receives a retainer. He got paid in advance. He hasn't done any work yet. What is the law firm's journal entry? What do you think, Brianna? You want to take a shot at this?
Hold on, let me read it again.
Okay. Let me take us through this one. This is one of your adjusting journal entries. When not the adjusting journal entry, but what happens prior to that. When you get paid in advance like this, you are going to debit cash and credit unearned revenue, which is a liability account. You gave your lawyer $12,000 today. Today's the 26th, I believe, and he's not going to do any work for you for a couple of months. Well, right now, he has no revenue. He has no revenue. He has a liability to provide his service. Now, here is your adjusting journal entry. The lawyer does some work for you now. You gave him $5,000, and now he performed $5,000 worth of legal work for the client. What is the journal entry there?
D.
What did you say?
Would it be D? Debit unearned revenue, credit legal fees, income.
Yeah, good, Justin. And let's talk about that because this is going out to the rest of your classmates. Yes. When you received the money, you credited the liability account called unearned revenue. That lawyer doesn't owe you money. He owes you $12,000 worth of snooping on your wife or something, okay? What is the total equity at the end of the month? At the beginning of 217, Fat Rack's factory equity consisted of common stock, paid-in capital, and retained earnings. The net income was 60,000, and they declared a 12,000 dividend and issued 50,000. Now, I don't think you're going to get as complicated a question as this on the test, but let's look at it together, okay? Somebody got an adding machine, a calculator for me, please, and follow me. We started off with 60,000 plus 100,000 in paid-in capital, plus 80 in retained earnings. That's 240,000 at the beginning, 240. The income was 60. That gets us up to $300,000. But then they gave out a dividend of 12. That gets us down to 288,000. And then they gave a dividend. I'm sorry, they issued some more stock at par, $50,000. The answer is 338. Is that helpful, Brianna?
Yes.
What I'm saying is on the test, have a couple of templates there. We're going to talk about that, not in this class probably, but in our Friday session. I'm going to do a bunch of these in Excel. When do we record a sale, Brianna? What's your favorite choice here from number 9?
When the goods are shipped.
Absolutely. Good. When the goods are shipped. On the goods shipped. Okay. Now here is a classic adjusting journal entry. At the end of the year, at the end of the year 2016, the prepaid supplies was 9,000. And then during the year, you brought in another 20,000 and you counted 12,000 in supplies at year end. You got this one under control, Justin? We had 9,000 at the end of last year.
Yeah, it's 8,000.
Yeah, tell us how we got that.
You have 20,000 at the beginning of the year. You have 12,000 at the end of the year. So you must have used 8,000 in the process.
Yep, that's all there is to it. That's all there is to it. Now, what is the journal entry to record that $8,000 of expense? Now it's expense. We're going to debit supplies expense and credit prepaid supplies. Uh-oh. Oh, what happened there? I moved it. Okay. Which of these accounts is not closed at month end? Yeah, this might not be a fair question. The answer I was going for was retained earnings. We close all expenses and all income accounts. Retained earnings, you do close it, but you don't zero it out. That's kind of a poorly worded question. Maybe I'll change this if I ever go back in the class. It is not zeroed out. Zeroed out. Okay. All right, let's keep going. 13, Fat Rack. Fat Rack provided the following. What was the gross profit? What was the gross profit? I think this question doesn't, yeah, that's, gross profit is simply sales minus cost of goods sold. This is a chapter 6 problem, so let's not worry about that one. We're not quite up to that.
Would it be 70,000?
It would be, what were the sales? 200? It would be 160,000. What you're going to learn in the next chapter, sales minus cost of goods sold equals gross profit. And then you subtract the operating expenses from that to get the net profit. Dividends have nothing to do with profit. Now, let me point something out here. Fat Rack's factory borrowed $36,000 from a bank at 10% to be repaid in 5 years. When you see 10%, that represents an entire year. Interest percentages always reference a year. So the first thing we have to be smart enough to say, well, 36,000 times 10% is $3,600 per year, or $300 a month. When did they borrow this money, Brianna?
April.
So what do you think is the right answer for how much they have to accrue if they're accruing it at 3,000 a month?
See?
You have 9 months left in the year. The answer would be C. C. You borrowed the money on April 1st. So at the end of the year, you have to accrue 9 months worth of interest expense. And you know that the interest is $3,600 per year. And so you just divide that out and get the $2,700. What's the journal entry? What's the journal entry? Well, we know it's going to be a debit to, what the heck here? How much referring to, what is the correct journal? Oh, okay. See, here's where teacher Bob screws up. See where it says 18? I meant it should have been 9. No wonder my class hated my guts. No, I'm only kidding. So this is the quick question. So what's the entry we make at the end of the year when we get the money? Any thoughts on this one, Justin?
I'd have to say, no.
Aren't we paying back money, not
We
receiving?
borrowed it. Yeah, that's a clunker.
Oh.
Let me do this. Let me just black that one out. That's a stinker. Okay. Let's skip that one. That's a bad question. By the way, when I teach in the classroom, if I botch up a question like that, everybody gets a freebie. Okay. Come on. Okay. Yeah, let's get past that. That was a nut. Okay. Here we go. Depreciation expense. Depreciation expense. And at this part of the course, the only method you know is straight line. Straight line. And you know, you're going to take the original cost of the asset less any salvage value or residual value, and that's your basis of depreciation. So here they purchased a machine on the last day of September 2017. What is the amount of depreciation to record for that year? Well, let's see, it's $96,000 over 8 years. That's $12,000 a year, right? 96 divided by 8 is 12,000 a year, 1,000 a month. They bought this machine the last day of September. So you got October, November, December. And now here, what is the journal entry to record this? You got this one nailed, Brianna? It's always the same 2 accounts.
I know it's accumulated in machine, but
We know we debit depreciation expense. And anytime you debit depreciation expense, your only possible credit is going to be to accumulated depreciation. See where I put credit the machine? You can never credit the original cost of an asset. Not at this point in the course, not for a while. Okay. So that's the one you pray will be on the test, because it's always a debit to depreciation expense and a credit to accumulated depreciation. Okay, now this one's a little tricky. What they're asking for are the total liabilities after they do some stuff, huh? I'll take us through this. Fat Rack had the following month-end balances in the general ledger. Accounts payable was, let me just fix this, it's distracting. At the end of the year, Accounts payable was 11, notes were 49. I guess that adds up to 59. I hope you guys have the calculators going. 11 plus 48. Unearned revenue is a liability. So that's now we're up to 56,000. But that does not include these adjustments. 56, and let me see, an 8 is 64. 64. Half of the unearned revenue was earned. That gets me down to 60. And they paid back this note of 25. I'm coming up with 35. Do you have a calculator going, Justin?
I didn't have a calculator going, but I was following along and I also got 35.
Uh-oh, no. Okay, don't tell anybody, Justin, okay?
Safe with me.
35, yeah. Yeah, what I did was see, I missed my own question. That answer would be correct if all of the unearned liabilities. That help a little bit, Brianna? Make a little bit of sense what we're doing there?
Yes. Sorry, I'm writing, so.
Right away, Mike. Okay. Oh my goodness, look at this one. Here's the easy way to do this, ladies and gentlemen. You have a pen and paper in front of you. Write down the accounting equation. Assets equal liabilities plus equity, right? And put 30,000 under assets and 20,000 under liabilities. Therefore, your equity is 10,000, right? Assets now went up by 50. They went up to 80, right? 80. And liabilities went up by another 20. Did you get the new equity, Justin?
Yeah, it increased 30,000.
Yeah. Let me just
Which is 40,000, 80,000 on each side.
increase 30, right? Yeah. So that little template, Brianna, Justin, very helpful because it's easy to look at this and get rattled. How do I know what the equity was in 2 years when they don't even tell me at the beginning? Well, they did, in a way. Cash flows. We have a whole big chapter coming up just on cash flows. What are your 3 types of cash flows? Brianna in the front row.
Operating, investing, and financing.
Absolutely right. Operating, the expenses Coca-Cola incurs in making this bottle of soda. When Coca-Cola needs to invest, if Coca-Cola has the ability to buy stock in another company, that's investing. If they borrow money or issue stock, there you go. And also investing is buying a huge fixed asset. Now here is, I think, an easy one if you work with this little template I'm going to give you, okay? Here we go. You ready to write a few things down? Beginning retained earnings. The next line down, plus net income. Next line down, less dividends. And the fourth and final line is ending retained earnings. So here they're asking for the beginning. They're asking for the beginning. So let's drop in what we can, okay? Let's go to our template. Put 50,000 next to net income. Put a minus 18 next to dividends. And they're telling you the ending balance was 150. So how do we get the beginning balance? You want to think about that for a second? Yeah, you're going to have to back into that number, huh? Net income was 50 and dividends were 18. 18. And the ending balance was 150. You come up with an answer, anybody?
Eh?
The ending balance was 150.
Could be.
I guess the way to ask the question is, let's do this. 50 minus 18 is 32. So the ending balance was 32, 150. Do I have another clunker here? No, the answer would be the 118, right? Yeah. You good on this one, Justin? Let's see if that works. 118 plus 50 minus 32 should equal 150,000, right?
Yes.
Any questions on that one, Brianna?
No.
Yeah, that's the one. I know you can do these problems pretty well. What I'm trying to emphasize, though, is make it even easier by having these little templates in front of you. Man, they make a big difference. Debit and credit means left, right. One time on a test, just as a joke, I had answered D was up and down, and some wise guy stood, picked that one. What is the impact on the financial statement when a company borrows money? Borrows money.
See?
You know something? We have another lousy question here, don't we?
Assets.
Assets increase. I don't see any asset increases there, huh?
Thought maybe. Mm-mm.
Okay. I put that one in wrong deliberately. Now the answer is right. Assets increase and so does the liability. Oh, for heaven's sake, come on. Who is responsible for a company's financial statements? If the
Management.
financial statements, what's that? Said A, right?
Yeah, management.
Management. And believe it or not, until about 20 years ago, that wasn't necessarily the case. How are things listed in your chart of accounts? Current assets and current liabilities are listed in what order?
Liquidity for
Liquidity. Very good, man. Thank you. Liquidity. Sarbanes-Oxley Act was enacted for what financial issue? Accounting fraud. Accounting fraud. This came out of the famous Enron fraud of the late 90s, early 2000s. Mike's Corp had lost money, but he still paid dividends. Well, let's see. Which of the following is true? The dividends increased the net loss, dividends decreased the net loss. A company with a net loss is prohibited from paying any dividends. All three of those are baloney, right? Dividends have nothing to do with income. A dividend is a debit to retained earnings and a credit to cash. So the true statement here is C. Yeah, a company with a loss can certainly still pay dividends. You have a company that's made $1 million every year for the last 20 years, and then you have one tough year, you still got plenty of capital. Oh boy, I better not ask this because I don't want to suffer a wrong answer, right? We all know this is the correct answer, right? Financial statements are prepared in order. Income statement, because you have to get the net income in order to roll it into the equity statement. And once you get the equity number, you can roll that into the balance sheet. I like these kinds of questions sometimes. Fat Rack forgot to accrue the salaries and wages. What's the impact of this omission or this error? He failed to accrue expenses. So what is the impact on this? Is net income understated? No, I don't think so. Liabilities are understated. Liabilities are overstated. I think it's B. Do you, Brianna?
I agree.
Yeah. If you fail to accrue something, you are overstating the net income. You fail to accrue $100,000 worth of expenses, and you told the boss that you made a profit of $100,000. And he said, great. And he went out and bought stuff. And now you came in the next day. I made a little mistake. We forgot this. Salaries worked from September 30th to start again, from September 24th to the 30th, total 36,000. That is an amount we must accrue. What is the correct journal entry here? Justin, you want to take this one?
Would it be A?
Absolutely, positively would be A. A, and this is one of your basic journal entries. You're going to debit salaries expense, and you're going to credit accrued salaries payable. Sometimes the book doesn't use accrued, but that's okay. All right. Which is a current asset here?
D.
What'd you say, Brianna?
D.
D?
Yes.
Yes, you are correct. That is a current asset. Current assets are those you're going to chew up in a year. I think I'm going to skip this question because this just drove my class nuts. I ended up letting them come away with 2 answers, but let's look at it. We ordered 1,200 supplies and received half the order. So I'm laughing because this is a stupid question. Anyway, we ordered supplies and we only received half of it, which is 600. And then we used 1/3 of it. What's the expense? 200. Students were coming to me and saying, we received half the order and used 1/3. It was just a poorly worded question. Hey, here we go, Brianna. What happens when a company receives a check for deferred revenues?
A.
Pardon me?
Revenues increase?
Yeah, the revenues are no longer unearned.
Yeah.
It said, deferred and unearned is the same. Let me change that to unearned. That's. Yeah, the answer would be C. That's when you record the revenues. When you.
Yeah.
Oh, wait a minute. That's not right, is it, Justin? I'm jumping ahead, right? You receive the check. What happened was liabilities go up. My bad. Had a little brain cramp there. When you received the check for unearned revenue, you debited cash and you credited the liability account called unearned revenue. And I think the lesson on that question was don't go too fast like I just did.
Yeah, I do that a lot.
Human nature. The entry to record depreciation expense has what impact on the general ledger? And this one makes you think a little bit. I'll give you a little Jeopardy time, okay? Are you ready for this one, Justin?
Yeah, I'd say B.
B is correct. B is correct. Now, that's a tricky question. Yeah, B is correct because we debited expenses and we credited accumulated depreciation, which is an asset account. So the assets went down. Which of the following would you never see in a closing journal entry or an adjusting journal entry? Well, I'll just say closing entry for now.
A.
Yeah, yeah, cash is not like supplies. You have $500 worth of supplies, and then you go out and you say there's only 400 left. So you say, okay, that means we assume we use 100. You don't go into the safe and count the cash and come back. We don't have 100,000, boss. We only have 93,000. He's okay. Well, we'll just adjust it down. No. What account will never require an adjusting journal entry? You can answer this one by the process of elimination. You're never going to adjust accounts payable or accounts receivable or cash. Unearned revenue, prepaids, of course. Okay, net sales. I'm going to skip this because this goes into the next chapter. Goes into the next chapter. They're giving you the operating profit. Which statement is correct? Let's see what we got here. Accumulated depreciation is the amount of depreciation on the income statement. I think not. Current liabilities are debts expected to be paid within 1 year. I like that answer.
Mm-hmm.
Current assets include patents, and that's a bunch of baloney. And the answer is B. Here's another one of these questions, Brianna, Justin, where you can kind of do it in your head, but what is the year-end stockholders' equity? Well, the beginning was 500 in retained earnings and 600 in common stock, so that's 1,100. And then they had income of 100,000, right? So that's 12, and they gave out dividends. The answer is $1 million. You good on that one, Justin?
Yeah.
Okay. Not too bad. Here again, this one we can kind of do in our heads, but if you have that little slip of paper that I just asked you to write down, let's see what we have here. Beginning retained earnings was 90 plus 50 beginning was 90. Income was 110, so that's 120, so that adds up to 210. The difference between 210 and 50 has to be the dividends, 160, because that's the statement where you bide your time. Beginning plus income minus dividends equals the ending. The ending. Here's another one of those what ifs. What if a company fails to record depreciation expense? I'll let you look at these. Similar to the question we had about 3 questions back, huh? Well, we did not record an expense. So I'm starting with D. Net income is overstated and assets are understated. That's not quite right. Expenses are understated. Liability had nothing to do with liabilities. The answer is A. Net income is understated and assets are overstated because you're adjusting journal entry. Once again, you debit depreciation expense and you credit accumulated depreciation. Okay. Wow, this is a big one, huh? Let's see if I wrote this question correctly. Here are some adjusting journal entries that were made, huh? So Van's net income was 100,000 before these guys, okay? So let's see if we can do this again. I'm going to ask you to use the calculator because I'm using the old skull here. We had 100,000 in income, and then we had depreciation expense. So that gets us down to 70,000, huh? But then we go up 16 to 86,000 because we accrued some revenue. So that's 86. We use insurance, that gets us down to 80. Rent revenue plus 84. Expenses 12,000. I come up with 72. Do you understand that process, Brianna?
Yes, I do.
Yeah, you know, at the end of the month, you have your trial balance, and there's a net income buried in that trial balance. You're not really looking at it at that point, but we're giving it to you here. 100,000. These are your adjusting entries. Debit depreciation expense, credit accumulated depreciation. Next one, debit interest receivable, credit interest revenue. Used insurance, debit insurance expense, credit prepaid insurance. Rent earned, you got rental income credited, rent receivable, etc. Hey, you bought a truck with cash.
Okay.
What's that, Brianna?
You use cash, but you get an asset or a different kind of asset.
They're both assets, right?
Yeah.
The answer is A. This was another question I experimented with. I think I finally cleaned this up. How much money did Fat Rack bill to its customers and pay to its vendors, huh? So let's do the customers. He had a balance of 120, and then you reduced it to minus 60, and then it went up. You know something? I'm going to skip this one because for me to present this properly, I want to do it like on an Excel thing. But essentially what you're doing here is you're saying you have 120 beginning, and you went down to minus 60, and you ended up with 90. So the answer would have to be 150. I don't see it there. So let's skip. We'll pretend we never had those 10 seconds of our life taken away. The main purpose of a year-end audit is not to uncover fraud. Hopefully it will if they do their due diligence and they manage to get a little luck. It does not have anything to do with that every transaction is accurate, nor to make sure the company pays its taxes. The auditors render an opinion. They take documents and attestments and all kinds of data provided to them by the company, and the auditors do their best to verify. If the company says they have $1 million in the bank, the auditors just don't say, okay, you have $1 million. No, they're going to go through some of your journal entries. They're going to have you sign a couple of pieces of paper to your different banks, asking for the bank's attesting that you did have that much money at that point in time. They're going to contact your suppliers, your vendors. They're going to do all kinds of tests. But if the company is trying to commit fraud and the auditors don't catch it, that's the responsibility of management. Who's responsible for writing the rules of accounting? That's the FASB, huh? FASB. Financial Accounting Standards Board, generally accepted accounting principles. Those are through two mnemonics you need to know. Gross margin plus cost of sales equals net sales. That's not part of our class yet. Which of the following is true? Is retained earnings an asset? Nope. Net income doesn't necessarily equal cash flows. Wow, I like that one. The balance sheet's done before the equity statement. The answer on this one is B, and that's the whole summary, if you will, of accrual accounting, accrual accounting. And GAAP means generally accepted accounting principles, not C. C is wrong, okay? Okay. So I thought I would take us through this test. I have another big one we can do. We can do maybe Friday. Brianna, Justin, is there any questions you want, or is there something you wanted me to go over again in preparation for the test?
Not particularly one thing.
Okay, it sounds like you're pretty comfortable with the materials, huh?
Yeah, I've definitely done well with the concepts. I think the biggest struggle for me has been the exercise, the actual doing of the exercises and stuff, the actual accounting process,
Yeah,
which isn't an issue on the midterm. So I don't think we need to necessarily review it now.
yeah. Okay, all right. How about you, Brianna? Is there a particular chapter or subsection of something that you'd like some more help with now?
Not at the moment. I think by Friday would, I need to get a little bit more.
Okay,
And by Friday, if we did another review, that would be great.
all right. Well, hopefully we'll see more of your classmates, huh? We're not drawing much of a crowd. We're like the St. Louis Browns of the 1930s. That's a baseball reference that would probably go over your head. Okay, so Friday, I have another test from somebody else we can review on Friday. In the meantime, jot down anything else you want me to talk about, okay?
I had a quick question. So
Sure.
was today in place of the chapter 5 lecture?
No,
Did I miss that?
I
Is
already
that
did. I already did chapter 5 in the form of a lecture,
perfect?
and that lecture is on Canvas right now. Chapter 5 is such a small thing, Justin.
Mhm.
It's just there's no real accounting in it. It's just a little bit of a history of the SEC, and they talk a little bit about the GAAP. So I threw that into the lecture that's entitled Chapters 4 and 5, ACC230. Have you been looking at the lectures online at all, Justin?
I haven't been able to find any of the recordings from this semester. I've been watching your previous ones from like last summer, I believe.
Oh, you're getting those where? Off my YouTube channel?
The Canvas links me to those. Yeah, your YouTube channel. They're in the modules.
Oh, okay. No, you know what happened there? If you see an older one, I deliberately stepped on it with that because I thought that was a better presentation. That's all.
Okay, so the whatever one I see in the module is the one that I should go by.
Yes, and on my YouTube channel, the Bob Smugula YouTube channel, if you just go there, they'll be in order, most recent, so you can see that as well. Okay,
That's where like these recordings will go. Because
yeah,
like for chapter 5, for example, I haven't been able to find the lecture that you did on that, but I've been watching the one from last summer.
okay, okay. Now, what I do with these lectures, guys, is I go to first. The only way I know how to do it is I set them up in YouTube. And then once they're in YouTube, I can then get the link copied properly. I find that I can't do anything unless I put it into YouTube. And that takes a couple hours. So this will be up on your module, this evening at the very latest, okay?
Okay, but so the chapter 5 one should be up in the module as well.
Absolutely.
Okay, I will look for that.
If it's not, email me right or text me right away and I'll take care of that.
Will do. All right. Thank you very
All
much.
right. Well, you take care, Justin. I'm so glad you joined us today.
Yes, thank you. It was very
Same to
constructive.
you, Brianna.
Thank you so much. I actually have a quick question, and I don't know if I'm going to be able to articulate it very well, but I was having trouble with like this inventory. So you receive so much, and then you have your cost of your goods sold, and then it asks what to credit inventory. Is it not the same number that the cost? Can you?
Maybe you can be more specific, but before that, cost of goods sold is an expense
Right.
that represents what you paid for the item you sold. That's all it
Right.
is. So go
How-
ahead with your question again.
How do you deduct that from inventory? Or
Well-
what are you deducting from inventory then, I guess?
Well, you don't deduct that from inventory, you deduct it from your sales. It's an expense. You're going
Right.
to have an income statement that begins with sales. And then the very first expense will always be cost of goods sold. And that gives you gross margin and then your operating expenses. Where are you looking at? Any particular place in the book or?
Okay, so like on our extra credit thing, it says like, yeah. Was there a question? I don't see the questions, but you have,
Could you share the screen?
oh, how do I, yeah.
Show me what you're doing?
I don't know if you can see because I can't see what I'm doing. But on this extra, can you see it? Because I can't see what I'm showing you.
I can't see it there.
Do you see me or do you see my screen?
It's hard to, I just can't read it. I'm so sorry. Maybe you could email it to me or text it to me.
Okay. Yeah, I can email it. It was the extra credit.
Yeah, why don't you text it? Can you do that?
Yeah, is your email provided on the or your phone is provided somewhere?
Yeah, you have my phone number?
I don't know. Can I get it and I'll text it to you?
805
805
452
452
4883.
4883.
So I have to run and grab my cell phone now. Hold on. Because I never bring my cell phone into the classroom.
All right. Okay, let's see it. D.
Boy, do I feel old with a text I got just now. I'm invited to my 55th high school reunion.
Oh, nice.
Jesus. All right, here we go. I got it.
Okay, so number D. It says cash received for food, merchandise, and games. And so that's the beginning. You have your cash and your revenue, and then
Okay. Yeah, they're getting a little ahead of the class here, but yeah. Okay, so the question was they sold something and they're giving you the cost of goods sold, huh?
yeah, and then they say what's your inventory, I
Yeah.
guess.
Okay. Yeah. Well, this is really two entries, or you can do it in one, like they did here. So yeah, you sold some merchandise for cash. You debit cash 365. You credit revenue 365, and then they're giving you the cost of goods sold. The cost of goods sold, Brianna, is only recorded the moment you sell the product because you no longer have that inventory. It's now an expense. So you debit cost of goods sold and you credit the inventory.
So what am I crediting the inventory?
92057.
But when I put that in, it said it was wrong. That's why I'm confused.
Let me ask you this question. Okay. Let me ask you this question. When you put the 92057 next to cost of goods sold, does it say that's correct?
I don't know. I don't know if it only tells me once I put in the credit, whether it's correct or not. So maybe that wasn't correct. But that's
Why
the
don't you
number.
read the problem to me? I might be able to just hear it now that I see what you're talking about. What?
D just says cash received for food, merchandise, and games. That's the receiving cash and revenue. So I did that one. And then the second part says cost of products sold for cash was 92057. Cost of products sold for cash. So then
What about the cost of the product sold not for cash? Or was it all for cash? Well, it was obviously all cash.
that's all it says.
Okay, well, they're telling you the number's 92,057. I don't care what this thing tells us. This is right. Based on what you're telling me. Now, once in a while, very rarely, but it does happen. Sometimes the publisher has a little glitch.
Okay.
And can I ask you just to read it to me? Be patient, please. Read it to me one more time, a little more slowly.
Just says cost of products sold for cash, 92,057.
That's pretty black and white. Well, the credit is 92,057. Absolutely. I'll point this out to my boss, Cornelia. She likes to yell at the publishers when they have a goof. And I think that's what this is, unless there's something I'm not hearing. So I wouldn't worry about that. 92,057 is correct.
Okay, I just want to make sure.
And you also will not lose any credits, any extra, what's the word I'm trying to say? Any extra credit points because of this, believe me.
Okay, yeah, I was just making sure I understood it. I don't, I just need to understand it.
Well, the reason you might not understand it completely is because this is chapter 7 stuff they're throwing at you, really.
Okay.
So they're getting a little ahead of the game, but that's okay.
Okay, well, that's it. And thank you so much.
Hey, you take care now. Bye-bye.
You too. Bye.
I say bye.
Bye-bye. Da, 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 da.